What if I told you that right now, while everyone else is panicking, there are stocks sitting at bargain prices with Wall Street analysts predicting gains of over 200%? Markets are bleeding. Your portfolio is probably down, and every headline is screaming doom and gloom. But here's what the news won't tell you. The biggest wealth transfers in history happen during crashes, not after them. During them, I've spent hours this week digging through earnings reports, investor presentations, and analyst data, and I found 5 undervalued stocks that are flying completely under the radar. Right now, each one has a specific upcoming catalyst. Each one has real analyst backing, and at least one of them has a Wall Street price target that will genuinely shock you. Stay until stock number 4 because that one is tied to a global supply crisis that most investors don't even know is happening yet. And when they find out, it could be too late. Quick but important, I'm not a financial advisor. Nothing in this video is financial advice. This is purely for educational purposes. Always do your own research before putting a single dollar into anything I mention. Your money, your responsibility. Now with that said, let's get into it. Before we start, I have a quick question for you. Drop a comment right now. Are you buying the dip, or are you waiting on the sidelines? I read every single comment, and I'll reply to as many as I can. And if you're new here, I post stock analysis like this every single week. Hit subscribe and turn on the bell so you never miss one. It's completely free and it takes 2 seconds. Kicking things off with one of the smallest picks on today's list, Intelligent Protection Management, ticker IPM. This is a US-based technology solutions company operating in 2 of the hottest spaces right now: cybersecurity and cloud infrastructure. They offer dedicated server hosting, cloud hosting, data storage, and managed security services for enterprise clients. And when I say enterprise, we're talking household names like NVIDIA, Dell, and Microsoft among their client base. With over 20 years of tech innovation and a solid patent portfolio, IPM isn't just a startup with a dream, they have a real, functioning business. Here's what caught my attention though. One Wall Street analyst currently has a buy rating on this stock with a price target suggesting over 200% upside from where it trades today. Now, price targets are never guarantees, but that's a signal worth paying attention to. Recent news: they just extended a key licensing agreement with a major data center provider through 2032, which signals long-term stability in their infrastructure business. Earnings are coming up shortly, and the CEO is set to present at a major investment conference, both of which could bring fresh eyes to this stock. The stock is up double digits just this week. Volume is picking up, and the market cap is tiny, meaning even a small wave of investor interest could move this significantly. Definitely one to watch. Now, this next one has a fascinating backstory, and honestly, it's the kind of setup I get really excited about. Meet Dragonfly Energy, ticker DFLI on Nasdaq. This is a lithium battery technology company. They specialize in cell manufacturing, battery pack assembly, and full system integration, operating under their well-known Battle-Born Batteries brand. They've deployed hundreds of thousands of battery packs through major OEMs and retail channels, and their patented dry electrode manufacturing process is what sets them apart from competitors. Their long-term vision: solid-state battery cells, which is arguably one of the most important technologies in the advanced energy storage world right now. Here's what really grabbed me. This stock was trading much higher not long ago, and now it's sitting at just a few dollars. But the underlying business hasn't disappeared. In fact, it's growing. Revenue is climbing quarter over quarter. Debt has been restructured, and they're now partnered with PACCAR, one of the largest commercial truck manufacturers in the world, in a collaboration that could lead to their batteries being commercially integrated into PACCAR vehicles. That's a potentially game-changing deal. They also just launched new solar panel products and won dual honors at a major sustainability awards event for their trucking power solutions. Wall Street consensus: multiple analysts covering this stock with price targets dramatically above where it trades today. The market cap is under $40 million, which means if even one of those catalysts hits, the upside could be enormous. This one reminds me of a battery stock I covered early last year when it was trading under $3. That stock has since gone on an incredible run, I think Dragonfly could have a similar trajectory. But again, do your own research. Stock number 3 is a completely different sector, and it's one that's been quietly printing gains while everyone focused elsewhere. Ring Energy. Ticker ORIA, an independent oil and natural gas company focused on the Permian Basin in West Texas. If you follow energy markets, you know the Permian Basin is one of the most productive oil regions in North America. Ring operates hundreds of producing wells there and holds significant acreage, giving them strong leverage to oil prices. What first caught my attention was the valuation. The forward earnings picture here looks compelling relative to what you're paying for the stock today. It's up over 60% year to date, yet to Wall Street, analysts still have price targets suggesting meaningful upside from current levels. The key driver here is oil. If crude continues higher, Ring Energy is positioned to benefit significantly, and at a market cap of around $300 million, this isn't some speculative startup. It's an actual producing energy company with real cash flows, if energy is a sector you believe in right now. Ray deserves a spot on your watch list. Okay, this next one is the wild card on the list, and honestly, it might be the most interesting one of all 5. Pulsar Helium, ticker PSHF in this. Yes, helium. Before you skip ahead, hear me out, because the supply story here is genuinely alarming. Helium is used in almost every major technology industry: chip manufacturing, rocket fueling, quantum computing, advanced electronics, MRI machines. The demand is massive, and supply, it's incredibly tight. One of the world's major helium producers has recently halted production, sending prices soaring. The U.S. Department of Energy and NASA are reportedly funding efforts to eventually mine helium from the moon. That's how serious this shortage is getting. Pulsar Helium is one of the few companies with first-mover advantages into untapped helium provinces Minnesota, USA, and Greenland. Helium demand is projected to double by 2035, and Pulsar is positioning itself right in the middle of that opportunity. 5 not 1. -1. Separate Wall Street. Analysts cover this stock with an average Canadian price target dramatically above its current $2 trading price. The low estimate alone represents extraordinary upside. This is high risk, high reward, but the macro setup for helium is unlike almost anything else I've seen in commodities right now. And saving the most catalyst-heavy pick for last, Gain Therapeutics, ticker GTXP on Nasdaq. This is a clinical stage biopharmaceutical company working on treatments for neurodegenerative diseases, including Parkinson's, Alzheimer's, and Gaucher disease. Their lead drug candidate, GT-287, is being developed as a potential disease-modifying treatment for Parkinson's, which is a multi-billion-dollar market with enormous unmet medical need. What makes this company unique is their AI-powered drug discovery platform combining structural biology, proprietary algorithms, and supercomputer-powered physics models to find drug candidates that others miss. Now here's where it gets really interesting and time-sensitive. The company recently presented Phase 1b interim data at a major international neurology conference, showing statistically significant biomarker evidence of disease-modifying effects. They've also submitted an in response to the FDA and are on track to start a Phase 2 trial later this year. For Wall Street, analysts cover this stock with targets ranging from $5 to $10 against a current price around $2.50. The float is tiny. The market cap is under $100 million. And there's a growing community of investors actively following every data release. Biotech is always binary, but the upcoming catalysts here are as concrete as I've seen for a company this size. So there you have it, 5 small-cap stocks with real catalysts, real analyst coverage, and serious upside potential if things play out. Now I want to hear from you. Drop a comment below and tell me, which of these 5 would you put your money into? And which ones would you avoid completely? I read every single comment. If this kind of deep dive analysis is useful to you, hit that like button. It genuinely helps this channel reach more people who are looking for this type of content. And subscribe so you don't miss the next one, because I cover under-the-radar opportunities like these every single week. Remember, I'm not a financial advisor. Nothing here is financial advice. Always do your own due diligence before investing a single dollar. I'll see you in the next one.